In brief, Q1 results showed that the Model Y was the best-selling vehicle overall in Europe and the best-selling non-pickup vehicle in the US. The Tesla team deserves a great deal of praise for their efforts, as this was accomplished in spite of several production and delivery hurdles. Hello everyone, today we are back to discuss one of the most talked about subjects in the stock market at the moment, Tesla's incredible Q1 profits. You heard correctly. I'm not only talking about Tesla's electric cars, the company is on fire. The first quarter of 2023 earnings report from Tesla has just issued, and the findings are rather intriguing. These outcomes demonstrate our portfolio's distinct path. So let's get started without further delay. Tesla is not immune to the pandemic's after effects. As we all know, they still have an impact on the economy. The way the business is responding to the circumstances is interesting. Finally, the reduction in vehicle pricing that they have been making may be seen on their financial statements. Now, let's examine the figures. The most intriguing feature of this quarter is Tesla's operational income. It's not all good, though. From $5.5 billion in the first quarter of last year to $4.5 billion this year, Tesla's gross profit has declined. We haven't experienced a drop in gross profit that year over year for a long time. Even after China closed its borders last year, Tesla continued to grow. However, this year's price cuts are significantly affecting their profitability. According to the results report, Tesla's operational income of $2.7 billion was less than in Q1 2022 and the lowest in a long time. If the operational income is smaller, you might be wondering why we are so happy. Going future, Tesla's profitability and gross profit will be the most important factors. Tesla is a rapidly growing company, which accounts for its current valuation. They can justify a $500 billion valuation with a 25x price to EBIT ratio if they can consistently generate $5 billion in earnings per quarter or $20 billion in earnings for the year. Reaching the $20 billion milestone this year, though, appears difficult. This is where Tesla's Q1 earnings report comes into play. Even though their operational income may have decreased, their gross profit and total profitability appear to be stable. This is significant because it indicates that Tesla is continuing to grow, even though it may not reach the $20 billion milestone this year. Furthermore, Tesla constantly introduces new products and innovates, which raises the company's potential for growth and profitability. Impressively, Tesla's Q1 revenue was $23.3 billion. Their operating income margin was 19.3%, the lowest it had been in the previous 4 quarters. These numbers could decline further because this margin does not account for all of the price declines that happened in Q2. While they make between $5,000 and $15,000 on a car, Tesla's business model enables them to profit from every additional $1,000 for full self-driving FSD. As a result, their margins and income statement may be considerably impacted by a reduction of just $1,000 to $3,000. It's like we're watching a real-time economic case study unfold. Initially, I thought Tesla would easily shrug off these price cuts and maintain flat earnings for a bit. But now, it seems earnings might actually decline. Looking at Tesla's operating income on an annual basis, last year they made $12.6 billion, which is impressive. However, with Q1's numbers putting them at a lower run rate, it's unclear if they'll reach the $20 billion mark. This uncertainty affects us stockholders as earnings growth becomes trickier to justify Tesla's trillion-dollar or half-trillion-dollar market cap. We all have faith in the company and its ability to innovate, but the numbers don't lie. Let's look at Tesla's energy business. Last year, it hit a record-breaking revenue of $1.3 billion, but this year they outdid themselves with $1.5 billion in revenue. The incredible growth in their Megapack business, deploying 3.9 gigawatt-hours of batteries, and the new Megafactory in Shanghai will accelerate this growth. Some might be concerned about the recent price cuts and their impact on earnings. However, as shareholders, we're in it for the long haul. While deliveries are growing by 30% and revenue is up by 20%, we are seeing EBITDA and gross profit shrink. If these price cuts continue, earnings growth might not materialize, which could be a concern for a growth stock like Tesla. But I still believe in the long-term vision of Tesla. Tesla's Q1 earnings might look a little soft, but let's not forget they are the most profitable and strongest company in the space, which spells bad news for competitors like Rivian and Lucid. Tesla has plenty of cash to get through this and will be fine in the long run. However, during this recession, earnings could go down or flatline, impacting such a strong growth story. Let's focus on the positives. Tesla's energy business is booming, led by their Megapack business. Their electric cars are changing the game in the auto industry. More people are switching to electric cars, and Tesla is at the forefront of that revolution. Elon Musk has hinted at a more affordable Tesla program. This new platform, expected to create the much-awaited $25,000 Tesla, will cost half as much as the current Model 3/V platform to produce. This doesn't mean the new Tesla model will be exactly half the price, but it will be significantly lower, making it accessible to a wider audience. The new platform will also mean higher production volumes, potentially decreasing wait times, which is great news for shareholders. Despite Tesla's valuation coming down to more reasonable levels, it's still a massive earnings count with strong sales and plenty of room for growth. Tesla is becoming a more mature business, which comes with a more reasonable valuation. There's economic uncertainty out there, impacting the stock market, but you shouldn't worry. Even with the bearish technical pattern, Tesla is still a stock to watch. At lower levels, Tesla is a much better investment, so now might be the perfect time to invest. Let us know what you think about the latest earnings call, and let's keep the discussion going. We'll meet again soon with another episode. EV markdowns took a big toll on Tesla's profitability in the first quarter. The EV maker's gross profit margin dipped below 20%, its lowest reported since the end of 2020. What do we learn from Tesla's latest financial report? Basically, we discovered that decreasing automobile pricing lowers your margins. In spite of this, the numbers of EV charging stations for Tesla that are currently in place are astounding. In the US, Tesla has over 17,700 fast chargers, according to the Department of Energy. Therefore, for electric vehicles made by General Motors, Ford Motor, Volkswagen, and other manufacturers, the majority of the network will remain unreachable. In all, there are about 29,000 fast chargers in the country, but most of them are owned by Tesla. Tesla's superchargers are the best in the business when it comes to charging technology, user-friendliness, the number of charging bays and stalls per location, and reliability above all else. Tesla has stated clearly that it plans to open up more of its network to other EVs and has been doing so in Europe for some months, so they will allay charge concerns for anybody thinking about making the switch to an EV. Given that the majority of sites are still V2 and V3 superchargers in many locations, sites with more V4 supercharged stalls will once again be revolutionary. At its Semi-delivery event, Tesla also revealed that the Tesla Semi and Cybertruck would be the vehicles able to make full use of the company's upcoming V4 superchargers. Another victory has been lost. So, guys, what are your thoughts? Is the Tesla supercharger genuinely revolutionary? What feature of Tesla chargers do you like best? Tell us in the comments section below. Please remember to like and subscribe to our channel if this is your first visit. Press that notification button and continue to watch for more information similar to this.